2889. That's the ICICI Bank profit figure that has come in, which is actually significantly lower than what we were expecting. Our poll had thrown up a number of 2923, which would have been a growth of about 15%. So the street is going to be very disappointed with the sub 2900 crore number. 3.4% for the gross NPA. I think
that compares with it.
3.12.
Yeah, 3.12. Yeah. So that gross NPA figure, that as well is a bit of a howl. And take a look at the stock. The stock has seen a lot of selling pressure in the last few minutes. The net NPA as well has come in at 1.27 versus 1.09 on a sequential basis. So that's clearly a big disappointment that we are seeing. Pull up the profit number again if we could just get that one up for you. In fact, I think
2889.
The NII has come in at around, so that's as well as a marginal miss of around close to around 3.5 to 4%. So the NII has missed. The asset quality is a big howler, and in fact profitability as well has missed street estimates. And as we speak, the stock is down more than 5%, not looking good at all. We have Ekta with us in the studio. Ekta, the numbers not looking good. Gross NPAs have increased even on a sequential basis. If we just look at it, it's up more than approximately 12 to 13%. The gross NPAs have gone higher.
And look at it in absolute terms also, Nigel. It's gone up now beyond the 13,000 crore mark, Ekta, for the gross NPA.
Yes, it's a disappointment coming in for ICICI Bank. Definitely, the net NPA has risen quite considerably. The gross NPA too has risen, like you mentioned. There were a lot of accounts that the street was watching out for this quarter itself. For example, Dabol as well as Bhushan Steel, etc. So we need to get more clarity in terms of what happened to these accounts this quarter. But just going by what we have seen, the provisions have spiked up to 980 crores versus 849 crores sequentially. That's a rise on a sequential basis. 980 crores compares to a figure of 694 crores year on year as well. So that's really where the disappointment has come in for ICICI Bank. I would assume that they are not going to have sustained their asset quality just based on the figures that we've seen. And that would be the key disappointment for ICICI Bank. The stock is down 5% reacting to its numbers. The net profit figure has come in at 2,889 crores this quarter. So that is also below our estimates of 2,923 crores. The reason would be the higher provisions, but maybe the operating profit should also come up. 5,036 crores compares to 4,439 crores. And the other income generally supports them. That too has been a little tepid this time. 3,091 crores is where it's coming at versus 2,801 crores. So that support hasn't come in from there either. Overall, it is definitely the asset quality which deserves the most mention. Net interest margins have been maintained. That's a positive. So 3.46 and compares to 3.42%. So that's a positive. We have Jignesh Shial. Yeah, we have Jignesh joining in of IDBI Capital. Jignesh, over to you in terms of asset quality for ICICI Bank.
And this is something we discussed even when we were not talking about Baroda numbers. We remain cautious, because there's been a pool of mid-corporate and SME accounts where the stress had been witnessed. And I think this is the same scenario which even ICICI faces this time.
Okay. Jignesh, stay on with us. Suruchi Jain of Morningstar is also on the line with us. Suruchi, you've had time to go through the basic numbers. What's your first take?
So I think the overall number is definitely a disappointment. We were expecting somewhere close to a 3,140 crore kind of number. And so this is definitely lower than what we expected. And the two key areas where we were expecting, better results were definitely the non-interest income. So what we've noticed for other banks is the fee income has been rising quite consistently.
So have you got that figure with you, Suruchi?
I think I have it. Non-interest income is at 3,091 crore.
Okay.
Which compares with, I think, 2,801 on a Y-on-Y basis.
Okay, so Suruchi, that's around a 200 crore increase on a year-on-year basis. How would you read that?
So that number is actually much better than what we expected. So I think, that's definitely a positive.
Okay.
But provisioning number is much higher than what we were expecting. We were expecting somewhere close to a 300 crore kind of number, 600 crore kind of number.
Okay.
For the quarter. And, it's come in, I think, closer to a 900 crore number.
Okay. I think, we need to mention the markets as well, because ICICI Bank is taking the markets down as we speak. Right. So it's just about testing 8,800 for the markets as we speak. We're down close to 500 points on the Sensex as well, and down 142 points now for the Nifty at the low point of the day. And this is something which the market was fearing, that ICICI Bank can turn the sentiment of the markets in today's trading session. Jignesh, I wanted to ask you about the internals of the asset quality, because post Q2, sustaining of the asset quality is what most of the analysts were looking at. Based on what we've seen on the gross NPAs and the net NPAs, are you worried that the internals in terms of slippages, fresh restructuring is going to disappoint you?
Yeah, I mean, both the ways, it is disappointing. Although our numbers had been we were a little more conservative on the bank compared to the street. Still the provisioning number seems far ahead of 980 crores close to. Far ahead of what even we were assuming it here. Now, there are two ways. One, slippage, the fresh slippage which is consistently rising. And second is we also have to see the slippage on the existing restructured book. That is also a cause of concern for most of these banks. Yeah. So, we have to exactly bifurcate what kind of number is it.
What was the street expecting when it came to asset quality? Because if you look at it, it's a 13% rise on the absolute basis for gross NPA, and this is the first double-digit rise we've at least seen in the past 4 to 5 quarters, if I'm not mistaken. Is that what the street was fearing, that ICICI Bank would sustain?
Yeah, actually, if you see the number-wise, ICICI never grew up more than 5%. Probably Q2 FY15 had been 6.5% sequentially, where the gross NPAs are rising. So, I think since FY13 or FY14, Q1 FY13 onwards, we never saw such a rise in the bank's gross non-performing assets. So that is something that the people are not happy with. Okay. Secondly, like Axis posted a good set of numbers on the NPA front as well as on the operational line and bottom line. Expecting ICICI to deliver similar kind of trend, but it seems there is some stress which is visible for ICICI. And that's what is dragging it. Yeah.
If I look at the numbers, guys, I'm looking at them in terms of the percentage increase. The NII is up 14%. It's in line with what we were working with. The profit is also up around 14%. What's really got the street is the asset quality. Yes, the gross NPA, net NPA ratios have worsened, and the gross NPA ratio stands at 3.4%. I think that's not gone down too well with the street. And the other point of the provision spiking up quite significantly at over 900 crores, which I think was quite a deterring factor for them. Jignesh, when you hear the management out, what would you want to hear, and what would you want to hear in terms of specific accounts as well? Which are the accounts which you would like to hear the management talk on?
I doubt they would be talking about any specific accounts and all, although we know there are large exposures that they already have it with some of the stress accounts. My base understanding would be two things that the management has to clarify. One, is there any change to their overall guidance that they are giving it consistently on the asset quality front? Are they rising or is it more stress which is going to come in the next quarter, probably in the first half of FY16? That is something that we are waiting for. And secondly, the growth pattern. How because operationally the bank has delivered pretty well. Whether it is operational profit or the NII, they delivered well. So what kind of growth momentum they are seeing on the credit side, that is two things that we would be waiting for the management to clarify this time.
All right, Jignesh, just hold on to that thought. In fact, as we speak, the Nifty has moved below that 8,800 level, and ICICI Bank has come in for a fresh bout of selling. So we saw the stock break the 360 mark. It moved up, it recovered close to around 1% odd, and currently it's moved to the low point of the day. And what's even more worrying is that Tech Mahindra, just watch out for that stock that comes out with its set of numbers, and that's the other one, in fact, that's seen a sharp knock just in the last few minutes. PNB as well as Bank of Baroda, they were always struggling, but as we speak, it's a battle not for the 9,000 mark that we thought at the start of the day. It's a battle for 8,800, not even 8,850. As we speak, the Nifty down close around 150 points, the Sensex down 500 points out, while the mid-cap index as well is down 0.5%. Not looking good.
Nigel, if we pull up the contribution chart, you'll see that just the top 4 of 5 stocks, that's ICICI Bank, which is taking away 36 points from the Nifty, HDFC, SBI, TCS and HDFC Bank banks. These stocks collectively, just these top 5, are taking away close to about 90 points at this point in time from the Nifty.
That's right, Sumera, and it's a pity because ICICI Bank, it always comes out with a set of numbers. Ekta always tells us that, in fact, it never disappoints. This time it's the king of the Nifty. It's got close to around 7.4% weightage on the Nifty, and it's disappointed. And because of that, single-handedly, it's dragging the Nifty by close to around 40 points. Remember, ICICI Bank traditionally had only around 5%. That weightage has gone up by close to around 2.5% in the last year or so, and that one's a disappointment. That's why we're struggling. But
and the entire banking pack is incrementally losing out. So if you look at the last hour losers, you'll see PNB, IDFC, Axis Bank, Bank of Baroda. All of these have lost about 1% in just the last few minutes. That's from the time that the ICICI Bank results came out. These stocks have lost about 1% from the top.
Okay. Jignesh, do you think that the gap between ICICI Bank and Axis will now increase? We've already seen it increase in terms of a valuation parameter. Barring today, will the gap increase?
I think those Axis actually delivered good set of numbers. Plus, since we're discussing about the NPAs and all, so provision coverage is something which is very strongly maintained for Axis Bank. It is close to 78%, which for ICICI is consistently declining. It should be close to 65% around. But that is one where the comfort comes for Axis at this point of time compared to ICICI. Probability is there that people might switch and there would be a difference of premium.
Just to tell you, the provision coverage ratio for this quarter for ICICI Bank stood at 63.5%. Also, the non-interest income, the other income was up 10% on a year-on-year basis this quarter. So we've got a couple of more details which are coming in. And the net loans to companies whose facilities have been restructured were 12,052 crores as of December 31st, 2014, and you compare this to 11,020 crores as of September 2014. But this generally differs from what the management talks about in terms of the press conference. That's where the real numbers come out. But provision coverage ratio at 63.5%, which compares to 65.9% in the previous quarter. Jignesh, your thoughts?
Yeah, the same thing I was indicating that for Axis the same had been 78%. And that is what they maintain even during this quarter as well. So this gives a little more comfort as far as asset quality is concerned for Axis.
Okay. So Suriji, if you had to just talk about... Okay, we've lost Suriji, we do understand. But Jignesh, if you had to point out the biggest disappointment which has come in for ICICI Bank this quarter, because the NII is just 1% below the consensus estimate. Net profit is also just about 1 to 2% below the consensus estimate. It's the provisions and the asset quality which might have actually surprised the street this time. What would be the key disappointment according to you for ICICI Bank, and would you change your estimates based on these numbers?
Yeah, definitely. One is the provisioning and the NPA. The second had been actually the other income. So if you actually see it has grown 10.4% YOY. If you actually drag last 4 or 5 quarters, apart from Q1 FY15, they generally were 20%, 20% plus kind of YOY growth they had given. And that was majorly contributed by the subsidiary income, the dividend from subsidiaries. Okay. So this was one worrisome part that they were dependent upon, and it seems that there had been some drag out there. So apart from asset quality, the second thing is the other income part which we are a little cautious about. Okay. We will change the estimates based on the management discussion.
All right, Jignesh, just hold on to that thought. Let's get in Vaibhav as well. But Vaibhav, we've had a look at the numbers. It's looking like a bit of a howler. Give us your first thoughts on it.
Clearly the asset quality has been worse than expected. The increase in gross and net NPAs both is well above what we were factoring. That is where the key disappointment is. I think on the operating income front, broadly, they've delivered in line with expectations. So it's clearly the asset quality which has really been worse than expected.
Okay. Vaibhav, I wanted to get your thoughts in on, a couple of other parameters. Say the NII as well as the profit figure. Is that in line with your estimates at least?
Yeah, that is. In fact, the margins have improved. So
margins have improved too.
So we were expecting flattish margins, so there is an improvement over there. And the net interest income is largely in line with expectations. Again, on the bottom line, and such other numbers, it's more or less, just a little bit below expectation. But the real disappointment was on the provision front, which is almost 20% higher than what we were estimating.
Are you changing your estimates based on what you have seen in terms of provisions, and hence maybe your book value estimates going into the year?
Due to the increase in the net NPAs, there could be some impact on our overall book value estimates for FY15. But at this point, most likely we would be maintaining our FY16 estimates. So in our view, these numbers which have been a little worse than expected do not necessarily indicate that, FY16 would also be bad. So those numbers are likely to be maintained.
Okay. What is your call on the stock right now, and what is your assumption in terms of, possibly the next quarter as well?
Well, for ICICI Bank, we had a buy going into the quarter as well, and we would most likely maintain it, for the reason that I mentioned, that the FY16 outlook still remains positive. So although there might be some tweaking of the numbers on FY15, but the overall view on the stock and the sector has not changed as far as FY16 is concerned.
Okay, I wanted your thoughts on the other income. I was looking at it, and it looks like it's a growth of 10% on a year-on-year basis this quarter. That is for the other income this time, but I think it was much higher in the previous quarter. So is that a disappointment?
Well, I think, broadly, as far as the fee income is concerned, the bank has been seeing lower fee income, so to that extent, it was expected that, the other income even in this quarter may not be very handsome. So for us, actually, that is not really a major disappointment.
Okay.